Good evening, ladies and gentlemen. I welcome you all to the post-earnings conference call of Krishna Defence and Allied Industries Limited. Today on the call from the management we have with us Mr. Ankur Shah, Managing Director, and Mr. Piyush Patel, Chief Financial Officer. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements, which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to quickly run us through the presentation for the quarter, performance highlights for the period that went by, growth plans and visions for the coming year, post which we will open the floor for Q&A. Over to you, sir.
Yes, thank you very much, Vinerji. Very good afternoon to all of you, and thank you for coming in, joining in for the earnings update for H2 FY24 and FY24. While some of you may already be familiar with our company, there are others who may not have had the chance to learn about us as yet. To ensure everyone is on the same page, I'll provide a concise overview of our company. I'm Ankur Shah, Managing Director of the company. I'm a production engineer from Father Agnew College, Mumbai University, and have been with the company since June of 2000. Due to the paucity of time, I will just run through the main slides of the presentation. This all have been uploaded on the exchange already. Right. Just an overview of the company. We are an engineering company catering to two main segments. One is defense and other is dairy. Our company boasts of an in-house research team which plays a pivotal role in developing homegrown defense solution that replace import products that is there and for indigenization. With a dedicated team of over 250 employees, we are proud to contribute to the nation's self-reliance in the defense sector. On our infrastructure, and we are headquartered in Mumbai with our regional office in Baroda. We have operations as in a factory located in Gujarat, situated close to Vadodara. In Halol, we have a manufacturing unit spanning about close to 60,000 square feet. And with the new shade acquisition, we should have an operation facility of close to 100,000 square feet. This entire facility is dedicated to the defense products that we are currently doing. In addition, we have our older unit, which is at Kalol, which is spread across about close to 40,000 odd square feet, which is focused on the manufacturing of equipment related to the dairy industry. I'm very glad to share with all that we've started with our new venture in Bangalore towards the defense electronics bit that is there, and our production facility / manufacturing facility is up and running. No presentation is complete without a mention of my father, who's who's the founder of the company. So in '97, my father, the founder of this company, late Mr. Ashwin Shah, who was a double engineer himself in the field of electrical and mechanical, started this venture with a mere investment of 10 lakh rupees and about 12 employees at Kalol, focusing on the manufacture of stainless steel milk cans to improve milk hygiene. In 2006, he took on the challenge of developing DMR 249 steel bulb bars for warship hull construction, achieving the first successful production in India for the Indian Navy. Recognizing the significance of R&D, my father formed an engineering team and mentored interns and junior engineers to drive innovation and create new products. A highly skilled team comprises of both engineers and MBA streams. This diverse team possesses extensive knowledge and expertise in our business domain, blending technical proficiency with strategic acumen. Their collective experience equips us with comprehensive skill set to navigate the intricacies of our industry, from product development and innovation to effective business management and strategy. That is our team. It's me on the left. Below is Mr. Sandeep Kadam. He's our Director of Operations. Right below him is Mr. Ravindra Maroli. Our CFO, Mr. Piyush Patel, he's on the call. Mr. Rohit Shintre and Mr. Jayasha. We are part of our team. That's our board with two independent directors, Mr. Sandeep Kadam, myself, and our chairperson, Ms. Priyal Shah. That's about the overview that I've already covered this up. Let me straight take you to the products, which I think is the most interesting for everyone. We'll take up the finance post this. On the left, the image that you see is about the bulbar. Bulbars are used as stiffeners for hull construction of warship. It's a very unique profile which ensures the strength to weight ratio is 3 times vis-a-vis normal steel angles and channels. Due to its high strength to weight ratio, these are used for construction of warships, and we are able to reduce the weight of the ship considerably. In place of the reduced weight, we can increase, we can add stealth features that take more manpower, more ammunition on the ship, and most importantly, we can have better speed of the ship. In fact, navies across the world use bulbars due to its high strength to weight ratio. We were given the Defense Technology Absorption Award in 2014 by Honorable Prime Minister Narendra Modi for a development of these bulbars, as prior to a development, Indian Navy was importing these steel sections from Russia. We've successfully supplied these bulbars to all the leading shipyards in the country, Mazagon Dock, JRSC, HSL, LNT, Goa Shipyard, so on and so forth. And I'm glad to share that we have also got our approval for the bulbars for supply to Coast Guard vessels that is there, and we've also bagged an order related to that. On the right is an image of a product called the ballast bricks. These are used for critical platforms, have a complex chemistry, and have a very low magnetic signature, making detection very, very difficult. I'll just toggle to the next slide. We are also manufacturing specialized weld consumables. These are complex, again, chemistries containing titanium, nitrogen, chromium, which are used for welding of underwater platforms and critical platforms for the Navy. The image that you see on the right is for the HVF profile. So this is heavy vehicle factory. These are used for manufacture components for the T-90 tanks used by the Indian Army. We were the only company that qualified in this bid. Prior to a development. All these profiles were being imported by the Ordnance Factory into India. Given the Indian Navy's substantial warship procurement initiative and the Prime Minister's vision to become top 5 shipbuilding nation in the world, and also the extensive order backlog of various shipyards, we are poised favorably to secure upcoming contracts that have the potential to substantially augment our revenues. The image that you see on the extreme right is of a Bukhari, which is one of our key products, which is a space heating device, or you can call it the room heater. These are being developed in close consultation with DRDO. This product is used by the armed forces at high altitude places like Leh Ladakh and Siachen to keep the room warm in freezing temperatures and extreme altitudes that they work at. Due to its unique design, it provides for complete combustion of fuel, thereby ensuring there is no carbon monoxide emission, which we all know is a poisonous gas. We had bagged an order about close to 64 crores, and the supply is in the final stages of delivery. These are some of the other products that are under development. I've already spoken about our R&D capabilities. That's our clientele base in the defense sector. I'll just quickly run through the dairy bit and straight come on the new products that we are wanting. This is about the defense industry. I'm sure most people know how Atmanirbhar and Make in India is making big statements within the country. Yeah, the way forward. Since we successfully developed well consumables for very complex chemistry for critical platforms, we are now being approached by other organizations like DRC and ISRO for development of another their group of very specific well consumables which they are currently imported. So these are all under development right now, and we are hopeful of pulling that through. Next on the list is, as I mentioned, we've started an associate company in Bangalore by the name Wave Optics Defense Solution, which is into radio frequency and optical fiber work that we have done. And we have successfully bagged an order from LNT for the supply of the same for these signals. Thirdly, we have partnered with an IIT Madras nurtured company, Planis, where we have also invested in it. And we are working together for development of ROVs and autonomous vehicles, which are used for hull survey, inspection, and other applications that can be done underwater. And lastly, on the collaboration, we are in the field of we are planning to start to manufacture of fire-resistant composite door and hatches. Worldwide, most European navies have moved to composites instead of steel doors and hatches. These are typically used in navy and underwater platforms. They want to replace the steel with the composite because of the reduced weight and the ease of operation for the same. That's about the Wave Optics Defense that I spoke about, the company which is into defense and aerospace. These are, I don't want to bore you with technical stuff, but these are the kind of products that we are doing over there. As of now, our order book stands at an impressive above 230 crores, and with the anticipation of securing additional orders in this financial year, we are eagerly looking forward to and are genuinely excited about the prospects for this year. Taking into account the substantial order inflow expected from shipyards and anticipating further growth, we have started to already enhance our production capacity, which will result in almost doubling our manufacturing capabilities. We as a company have revised our target from a 30-35% given previously to about close to 40% year on year for the next 3 years. This is in brief about me and the company. I hand it over to our CFO, Mr. Piyush Patel, to talk on the finances. Over to you, Piyush bhai. Thank you.
Thank you, Mr. Ankur. Good evening, ladies and gentlemen. I welcome you all to the H2 and FY24 earning update conference call of the company. I'm going to give you financial highlights for the year and for the H2 FY24. For the FY24, total revenue of the company stood at rupees 1064.28 million in FY24 against rupees 636.53 million in FY23, thereby showing a growth of 67.20%. The company reported EBITDA of rupees 154.38 million in FY24 against rupees 88.50 million in FY23, a growth of 74.44%. EBITDA margin have increased to 14.51% in FY24 versus 13.91 in FY23, a rise of 60 basis points. On year-on-year basis, PAT surged by 84.86% to rupees 97.90 million in FY24 against rupees 52.96 million in FY23. PAT margins have increased to 9.20% in FY24 against 8.32% in FY23, a rise of 88 basis points. Now, coming to the half-yearly financials, for H2 FY24, total revenue of the company stood at rupees 711.99 million in H2 FY24 against 441.05 million in H2 FY23, a growth of 61.43%. The company reported EBITDA of rupees 107.38 million in H2 FY24 against rupees 56.28 million in H2 FY23, a growth of 90.80%. EBITDA margins have also increased to 15.08% in H2 FY24 against 12.76% in H2 FY23, thereby showing a jump of 232 basis points. PAT surged by 95.82% to rupees 71.61 million in H2 FY24 against rupees 36.57 million in H2 FY23. PAT margins have increased to 10.06% in H2 FY24 against 8.29% in H2 FY23, a jump of 177 basis points. Once again, thank you all, and over to you, moderator.
Thank you, management. We'll now open the floor for Q&A. All those who wish to ask a question may use the option of raise hand. In case you are unable to raise hand, you may send us the message on chat. We'll start the first question from Varun. Ankur, you can stop the presentation.
Yeah.
Yeah, Varun, you can go ahead, please.
Thank you for the opportunity. Congratulations for a stellar performance in FY24.
Thank you.
So I was looking at the closing order book. It is somewhere around 186 crores. And current year also we will be receiving further orders. So our guidance of about 40% growth in FY25 looks too conservative.
Not conservative, that is there. That's the target that we have, but we want to make sure that we surpass it per se. Currently, as I mentioned, we have an order book about close to 230 crores because we've bagged an order also in first week of April towards the bulb bars that we are supplying. So we are gearing up for that. We want to be more, we want to try to do more than what we publish. So hence the number.
Yeah, and we have already developed a new product in wave optics.
Yes.
So I just wanted to know what is the size of opportunity of that product and who are the competitors in that product?
Currently the product that we have developed is a bidirection signal for the radio frequency over optical fiber. We've done trials that have been successful, post which we have bagged an order. Now, this is more for signal intelligence and very specific units of the army. The opportunity size is, when I say large, they're looking at a very, very crazy number, which might be too premature to say right now. But they've done a trial on about 40 systems, each system costing about close to 9 lakh rupees. We expect that they will be upping their order to about 1,000 to 2,000 systems, because that is what the requirement, or probably much more than that. And in terms of competition, currently we have none that is there, because we have developed the product ourselves, and we've already filed our patent related to that. We have not been granted. So work on that is in progress.
So per system, how much is the revenue that we get when we sell this product?
About 9 lakh rupees, sir.
Okay. And right now we have about 25% stake in Wave Optics. Going forward, I'm sure we may be planning to increase our stake. So
Yeah.
what is that thought process or any timeline in your mind?
In the next 6 months, we should be upping our stake to about close to 51%.
Okay, suppose that it become a subsidiary.
Yes, yes.
And in FY24, what was the percentage of revenue from bulbars as a total comparison to the total sales?
Usually
Just
I love to tell you
approximately.
that number. Yeah.
Yeah, see, what I can say is it was around 55 to 60% of the total revenue. See
Okay.
what
And
we
going
achieved in
forward, as
defense.
we
It was, yeah,
going forward as we launch new products, I think this may further go down.
Yes.
no, yeah.
Yep.
Okay.
Yeah.
Thank you so much,
See,
and all the
our
best for.
contribution of,
Thank you, Varunji.
thank you.
Thanks, Varun. We'll take the next question from Pradeep Rawat. Pradeep, you can go ahead.
Yeah, am I audible?
Yes.
Yeah, good evening and thank you for the opportunity. So I have a couple of questions. So first question is regarding our tie-up with DRDO. So is it an exclusive tie-up and is there a royalty for the tie-up?
So for some of the products, we have competitors that are there, and these are complex systems that not systems, some complex products, I would say, that the DRDO envisages that are there, and they choose the partners who think they will be capable of developing and delivering the product per se. As per the new DAP policy, or since 2020, there is no royalty to be paid as long as the goods are supplied for Indian Defense Forces. If we are to export it, then there would be a portion of royalty. But currently, there is none.
And there is no exclusive tie-up, right?
No. So it depends from product to product. There is for the bulbars, there is another company in Delhi, which is for the bulbar. We've been registered for about since 2010, about 14 odd years.
So what is the name of that company that is into bulbar?
The company is by the name Starwire.
Starwire. Okay. And my next question is regarding our order. So how much our order is from the government entities?
100%, sir. Except if you consider L&T not a government, that is there. So that percentage will vary. But majority of the business comes from the defense, sir.
Majority is from the defense. And
Yes.
how much guarantee do we put for these orders in percentage term and in value terms?
In percentage terms, it varies from product to product, but it varies from about 3% upwards to 10%. It's in form of performance bank guarantee.
And right now, what is the in value terms?
In value terms, because these are all 12-month gestation period, in value terms, it should be about close to 20 odd crores that is there. Because and it keeps, because something that we supplied in 2023 is still still in, and the current supply that also we've done is there. So that's a rotational basis. But if I'm correct, the numbers should be in that range.
Okay, and the order execution timeline is close to 12 months, right?
It varies. It varies from order to order. Some orders have to be done in about 6 months' time. Some orders will be 18 months or 24 months also.
Okay, and my last question is regarding our existing facility.
Yes.
How much top line can we generate from our existing facility, and do we have any land bank to like do a brownfield expansion on the same facility?
So the current capacity that we have installed, assuming with the different product mix that we have, we can do about close to 180 to 200 crores in terms of revenue. But as mentioned, we have acquired land right next to us, more like a brownfield, as you mentioned. And with that, we should be able to up our capacity to about 350 to 400 crores in terms of revenue. It's a product mix that is there. So I'm giving you an average number.
Okay, okay. I will get back into the queue. Thank you.
Thank you.
Thank you.
Thank you,
We'll take the
Pradeep.
next question from Ajay. Ajay Surya, you can go ahead.
Congratulations on fantastic set of numbers. So my question is, in the last call also we had a tie-up with this Netherlands-based company for composite doors and hatches. So sir, wanted to know what is the update on the same?
It's going forward. It's going forward, and we should be. Our trials will start from next month, the month of June. Once the trials are successful, parallelly we have started to work on the manufacturing related to the same. We expect that by Q3 we should be starting. The actual production of the same.
Got it, sir. So my next question is, sir, looking at the current order book and the growth guidance which you are giving, sir, are we seeing such fantastic order inflows, and from which product line are we seeing those inflows?
Definitely, our Virat Kohli is the bulbars, right? So they are bringing us a decent amount of revenue that's there. But even for the weld consumables, the ballast bricks and the Bukhari and the other related products that we spoke about, they are also getting repeat orders for the same.
Sir, but going forward, like, can you just provide a mix, like, what could be the tentative mix between the products? Majority of the revenue would still be bulbars, or would it be Bukhari?
But we expect, if you just ask a broad thing, we expect about bulbars to do about close to 50% of our revenues, somewhere in that range, followed by what well consumables about close to 15 to 20%, Bukhari about 15 to 20% that is there, and other related products about the balance 10% that it will make up for.
Got it, got it. Okay, sir. So that's
Thank
it
you.
from my side.
Thank you. Thank you, Arjun.
Thanks, Ajay. We'll take the next question from Smith Doshi. Smith, you can go ahead.
Hi, sir. First of all, congratulations for the fantastic execution.
Thank you, Smith.
And
Yes,
so I just have two couple of questions. First is with regards to 3rd April order update of 88 crore rupees. So that should be executed in 8 months. So it is in a full length manner or in staggered manner. So in first of half, whenever result will come, so it would have any reflection of that order execution, or it would be in March of 2025.
So the execution will start as early as next month, but not all of it will be executed by end of Q2 that is there. It will spill over to Q3, but we have to do it in about 8 months' time. So, you can do the math accordingly.
Okay, okay. So it would be booked month on month, right?
Yes, yes, yes.
Okay, okay, got it. And what about order pipeline? Actually, so we have right now a good set of orders, but what about the pipeline going ahead and bidding going ahead?
So we have, I cannot disclose right now. There are other orders that are in process or under evaluation or at tendering stage per se, which we expect to close within this financial year.
So any ballpark number which you can give or which can get better idea about the pipeline or something?
Yeah, it would be difficult to gauge that number. That is, of course, we have the number, but it'd be too premature to talk about what we are already doing. We would stick, rather, our focus would be to right now to execute the orders that we have in hand right now. And we know we have another, 10-month window to collect orders for this year or for the later after the year of FY25. But these are sizable amount of orders. So we, as I mentioned, that we are looking to grow at a 40% CAGR. That will continue. The number we have revised that number upwards, keeping the trend in mind.
Okay. Thank you so much.
Thank you. Thank you.
Thank you.
Before we go to the next participant, I have a question on chat from Mitul Mehta. His first question is, can you talk on building the key talent in the defense business?
Yeah. So, a very valid question, Mitul. We are already started to work on that. We've had to start to do our recruitment that is there, and not at the junior level, of course, junior level at the work side that is there, but also on the execution front with the shipyards and all. We've enrolled 3 to 4 people in the middle management to grow our team. So that work is in progress, and we are looking to do it, as we move forward. But that is something that we've been doing for the past 6 months. We also have to find the right match. So we've successfully been able to induct about close to 3 to 4 people in the last 4 months for us.
His next question is, can you elaborate on R&D as to how much we are investing currently?
Wow. So R&D, we are, as I have mentioned earlier and in my earlier calls, we as a company have a policy that we continuously look at our development, more not research that is there, but more on development front that is there. We are exploring newer opportunities, keeping the customer in mind. And, shipbuilding, as we all know, is a 5 to 6 year cycle. The current products that we are building, which is bulk bars or weld consumables or ballast brake, these are all used in first stage of shipbuilding. We've added one more product right now, which is the composite door hatches, which is used in the second stage of shipbuilding. So we are targeting shipbuilding, and we are trying to add products on that front. We are currently working on a couple of opportunities on that front too. And our goal is to look at other products, new products where we can, if you have to achieve, a 500 crore revenue whenever we talk about it. So we want to have that with 7, 8 products, not just have one product having like 400 crore revenue and other products being there. So we are looking to have a product mix in such a way that we have about 7 to 8 products, each bringing us a revenue about 50 to 100 crore average.
His next question is, how much are we investing in the brownfield capex, and how much time will it take for the facility to get commissioned? Which are the products we will be making in the new facility?
Right. So the new facility will where we manufacture all the 2 products that is there. One is the weld consumables and the bulbar. It's just touching our shed, so our land area becomes bigger, and we will be spending about close to 15 to 20 crores on that work, and work is on the same as already started, and we expect that entire thing should be operational by about October sometime. We've started work on this in January. So, we are almost like 30% into the work. Placement of orders of the equipment has been done. Land work has started. We've started with the civil infrastructure work. So we expect that by about September, October, that the entire facility should be up and running.
Sure. That's it from his side. We'll take the next question. Oh, wait, there's one more question. Any plans to shut down the dairy business?
Currently not, but if you get some, if you have a strategy to work on that, we may work over that. Because so Dairy was working on an auto business, auto model that is there, and it's generating revenue. So we've just kept it going. But this is something that has been discussed with a couple of investors. So we may look towards that, but definitely not in this financial year.
Sure. We'll take the next question from Shubham Upadhyay. Shubham, you can go ahead, please.
Yeah, hi. Good evening, everyone. Thank you for the opportunity. First of all, congratulations on a very good set of numbers.
Thank you.
My question is, in the last interaction, you said that when it comes to bulb bars, the split between the order wins between you and the competitor is 40-60 or 50-50. So
Yes.
have we been able to change that number, or is that number same? still?
Yeah, Shubham, honestly, this is something not decided by us per se. These are all tender terms condition, and generally they split the order in order to ensure their project is not suffering. Right. So it's not a mandate done by us, and I cannot pull in 70-30 or make it 80-20. It's a government deciding thing too, because these are very critical components. The shipbuilding cannot start or cannot progress without that. So hence they divide their risk, divide their risk between two players. So the ratio is about 60-40 or 50-50 as we call it.
Okay, and thank you. And second, my question is again regarding the possibility of export. So I understand there are some restrictions on export on
Yes.
some products. So
Yes.
are we looking like, is there a possibility opening up for exports of bulb bars, like for example?
Right. Shubham, you asked me this last time, I remember categorically. And, we are trying that if we could get an opportunity to export. But, and there are papers and talks happening on that direction because of Prime Minister's vision that we should become a defense export country per se. But, these are depending on the kind of product that you're doing. The products that we are doing are more critical. And currently, as we speak, we do not have permission to export. But there are talks and meetings happening in that direction for us to also permit that in the future. But as we speak, we do not have permission to export.
Okay, thank you. I will rejoin the queue.
Thank you. Thank you,
Thank
Shubham.
you. We will take the next question from Aisha. Aisha, you can go ahead, please.
Good evening, sir.
Good evening.
Am I audible?
Yes, loud and clear.
Firstly, I would like to congratulate you for such good numbers. My
Thank you.
question is on the recently raised funding. Can you elaborate us on the fund use plan?
Yeah, so as mentioned, while we had done the fundraise, we were looking to do about close to 15 to 20 crores towards capex, and the remaining about 35 to 40 crores towards working capital because of the order flow that we were anticipating earlier. And that is how the funds are being utilized.
Okay, thank you. And another question I had is, you are looking to expand Bulbar, which is a bulk product. Can you elaborate the expansion size and what is the revenue potential at full capacity utilization?
So, if we put it in terms of numbers that are there, our current capacities, depending on the size, and because there are 19 different sizes of bulb bars, so just to put a number might not be easy, but we can do about close to 2,000 to 2,500 tons annually with our existing capacity, and with the capacity expansion, we should be able to achieve a number of close to 4,000 tons.
Thank you.
Thank you.
Thank you. We'll take a follow-up question from Pradeep Rawat. Pradeep, you can go ahead, please.
Yeah, thank you for the opportunity again. So my question is regarding our composite door. So you said that you are like doing R&D on this product, and after bulbar, composite doors are used in the production process of ship. So my question is, can this product become the next folio of our company?
Yeah, we are hoping that too, Pradeep, and that's how we've identified the product for sure. There is a market on that front. In fact, I just joined it slightly late because I was at Masgon Dock, and they called few of the vendors for the next projection, what the requirement is going to be there, and they've actually indicated the product that we spoke about. So we are hoping that we have also good numbers from that product.
So can this product be bigger than the bulbar product?
Difficult to assess it like that because they're two different products at all, right? They're two different products at all. If you're going to make a freight, like an FSS, a fleet support ship, you'll not require too many doors hatches, but the bulbar requirement is very, very high. But if you make an aircraft carrier, you will have high bulbar requirement and a high composite door hatches requirement. If you make a frigate, then it's the other way around. So very difficult to say numbers perspective whether this will win the race or this will win the race. But as long as we're getting revenues, we are happy.
Okay, and my second question is regarding the margin profile for bulbar. So, how is the margin for bulbar, and how is had been historically, like pre-COVID period bulbar margins?
So
Ankur, if it is competitive data, you can avoid it, please.
Yeah.
it's public.
So on the margin front, if since we've already given the numbers on the EBITDA front and the percentage of the sales that is there, I'm sure Pradeep, you can do the math around and come at a number. But more or less, it's in the average of what has been showcased in the EBITDA numbers as a composite.
Okay, so my question is regarding the historical and current margin. So, for example, if we take like one as pre-COVID margins, what it is been after COVID?
Yeah. I'll answer this slightly differently. Pre-COVID or, like 5 years back, we never had the high tonnage of bulb bars that we are having right now that we are catering to. So we are doubling our capacity. And, it's a matter of unit economics. The more we produce, the more efficient we are going to become. The yield is going to become better. So margins also will move forward.
Yeah, okay, thank you.
Thanks, Pradeep. We'll take the next question from Pradeep Chaudhary. Pradeep, you can go ahead.
Hi.
Hi, Pradeep.
On the composite doors and hatches, when do we expect to finalize on the JV with our foreign partner? And will our stake be in excess of 51%?
We should close that very soon. I am not put a timeline to it, but literally very, very soon because we are starting trials next month. And in terms of the joint venture, we definitely be 51% or more.
Okay. And to if you have to divide the demand between replacement demand for existing ships as compared to new demand for new ships which will be constructed. Which one do you feel would what would you be able to tap in the first year or two? Would it be replacement demand or would it be the one for new ships being constructed? And
Definitely.
what could the size be?
Well, definitely on the newer will be faster because when ships come for medium refit or the major refit that's there, it takes time. First they want to make sure the product works in the newer ships that is there. So the replacement also will come up, but not right now. It might be too early to predict on that, but that definitely is an opportunity we can see because that's what most of the navies in Europe did it. So I'm sure we will follow same suit. But immediately from what I understand with the different talks with the naval authorities, it will be first the newer ships for sure.
Okay. And what sort of order size or opportunity size could you capture in the next 2 to 3 years with this product?
In line to what our plan is that each product should bring us a 50 to 100 crore revenue that is there. So we expect that is what will play for us.
And is this product likely to have better margins than our current blended margins?
It should be in the same range, couple of 100 points plus minus, but it should be in the same range, because it again, once we make a product, then we'll have a more detailed thing that is there. But right now, what we've done on the what we've done on the project thing that is there, it seems to fit inside the EBITDA margins that we are talking about right now.
Would there be any other competitor? As we would be starting trials next month, we would also have a fair understanding of who are the competitors.
Yes, there is another company in Bangalore also who's under development that is there. So currently two companies will be there, not currently. There will be two companies bidding for the project.
And what sort of a manufacturing setup would this be? Because you're saying if you have to start production by Q3, that means
Yes.
in less than 3 months, you would have to, put up your plant.
Yes, so these will require some robots that are there and some machines, which are used for making of composite layer by layer. So these are the products. Then some machining is required. Some facility that we already have will be used. So on that side.
And in your presentation, in one of the lines, there was a mention of latest edition of electronic warfare communication, data transmission, and Comnet and Signet. So, what is this Comnet and Signet? Is it the
So,
same as yeah?
yeah, so it's communication network and signals network that is there. These are electronic terms that are generally used, the electronic lingo that they use. So that's what has been published.
This is for our subsidiary that we have formed.
Yes, spot on.
And for our existing products, if we have to talk about bulb bars and the other four products that we have, given how given the pace of new ship that are under construction and that will come up for construction over the next 3 years,
Right.
what sort of scale up do you see in your existing products of bulb bar and the other four?
So, Pradeep, as mentioned earlier, we are looking at a growth about 40% CAGR, so you can do the math and we can see this happening for the next 3 years, year on year, So that's the growth we anticipate from the shipbuilding side for the products that we are already doing.
Right. And just last question on margins.
Yes.
Since we would experience a significant increase in our production over the next 1 to 2 years, I'm assuming operating leverage would also start to kick in. So
Yes.
where do we see our margins inching up from 15% that we clocked in the second half? Can we go to something like 20% in the next 1 to 2 years?
So I think the 20% was what we would aspire to reach that is there, but the reality will because the growth in numbers and revenues are there, and as I said, more tonnage, unit economics will work better. I see we landing somewhere between the current figure and what we desire to be, right? So it should be somewhere in between.
Okay, great. Thanks a lot. I'll get back in the queue.
Thank you so much, Pradeep.
Thank you. We'll take the next question from Sachin Sodhi. Sachin, you can go ahead, please.
Yeah, hi, Ankush ji. Good evening.
Good
And
evening, Sachin.
congratulations for good set of number. And really
Thank you.
enjoyed last treatment and many congratulations to your commitment also. So,
Thanks.
apart from these four products, I want to understand this ordnance business. Do we have any plans? Because there is an indigenous production that Indian government is also looking for. So, any plan you have for that?
Ordinance. I mean, I didn't get the question, sir. The
The
ordinance, as in ordinance, is doing too many things.
ammunition business.
Oh, ammunition business. Okay.
Yeah.
So, Sachin, we are currently on the drawing board for that. But please understand, ammunitions is a very complex business with the licensing and the peso, yeah, explosive license and all that is way complicated than in terms of the licensing and the approvals than what we are doing right now. But looking at the demand and plus the uptake from the Navy that is there, we are considering to venture on that line. But it is a lot of work before we actually start spending money on that. So that is in line, I would say,
Okay.
to answer your
Okay.
question. That is something that
Yeah,
we are
that's why I'm
working
just
on.
asking.
Yes.
Because there's mostly import from Europe and India
Mm.
factory not able to produce that quality.
Yes. No, a good point, Sachin ji. We are
Yeah.
also of
Thank you.
the same opinion as you.
Thanks.
Thank you.
Thanks, Sachin. We'll take next question from Samarth Pachigar. Samarth, you can go ahead.
Yeah, congratulations on a very good set of numbers. I
Thank
would
you so
like to
much.
ask you that how the order cycle works for us, like how orders are received by us. Like, can you explain in a bit that order goes from Maison Dock, for example, if Maison Dock is a shipbuilding company, so is it in a way that Navy orders to Maison and Maison Dock does transfers that order to us?
Yeah. Fair enough. So I'll just take a typical example of the bulb bar, right? Because that's what we've been speaking about. So the Indian Navy, as you know, does not buy products. They buy ships. That's what they require. So they will come out with a tender for a aircraft carrier, a frigate, or a corvette that is there, and you'll have all the shipyards in the country bid for it. Whoever is the lowest amongst the Cochin shipyard or Masgon or GRSC will bag that order for the frigate or corvette that is there, or it may again be split between both the shipyards, like that happened in the case of NGOPV. Once the shipyard gets the order, then they will come out with the limited tender, because there are only two approved sources for that on the GEM portal, and we will bid for the same. And in terms of timeline, let's say the bid was the tender was issued on the 1st of January. Typically by 15, I mean 2 weeks, you have to submit our bid, and post that the evaluation takes another couple of weeks. Plus, after that there'll be negotiations. So once the tender has been issued, typically about 6 to 8 weeks in general cases, unless it's a complex project that is there, 6 to 8 weeks, we will have the purchase order with us. Sometimes it may stretch even to 10 to 12 weeks because of the procedure delays that happen.
Okay. I have one more question. Suppose,
Yes.
just an example, if Maison Dock has an order book of, let's say, 40,000 crore. So how
Yes.
much percentage of it is catered by us?
Slightly difficult to answer that question, because you are referring to a number of what they have. All ships are very different depending on what the weapon on the ship is, the ammunition. So it varies from ship to ship. But in terms of tonnage, of what each ship is required, we can say about close to 2% of steel is what the Balbar requirement is ideally there, in terms of value terms per se. When in terms of tonnage, it's about 15% is required.
So in value terms, it is 2% of the total steel requirement, right?
A total, 2% of the total value of the ship. Now, again, this is a very
Total value.
random number, because it will change. If it's a mine detector, it'll be different. There are more sensors, so on and so forth. But just to give you some number on what you're talking about, it could vary to as high as 3% or also be 1.5%. So, the tonnage is the more real number for us to arrive at.
Okay, and tonnage is 10 to 15%.
10 to 15% of the weight of the ship.
And I just wanted to understand one thing, that we are into lots of products, like we cater 8 to 10 products, and we
Yes.
recently started with this electronic communication business
Yes.
as well. So,
Yes.
what's the logic? Means, and just a logic or a strategy behind having so many products on board with us?
So the strategy is very clear, Samarth. We are looking to have 7 to 8 products that are there, with each which can bring us a revenue of 1,500 crores, instead of us being solely dependent on only one product for us to reach our next target about 500 crore revenue, right? So and we actually look at developing more and more products that are there, because we back ourselves on our engineering strength and engineering team.
Okay, and just one last question. Can you, for the Balbar business, can you explain us the unit economics, how it works for us in Balbar? Because in the last con call as well, you mentioned quite frequently about the unit economics works for us in a better way. So can you throw some light on it?
Yeah. So let's say we have a cost of engineers. We have about 20 engineers, each costing like 20 lakh rupees per month is our cost for a few set of engineers that are there. Now, if we double up a production, we will not require 40 engineers that is there. So those are costs that will get divided over a larger number of unit, and hence the profitability the EBITDA will go up. That is there. There are variable costs in terms of electricity, power, fuel. Those will vary with the numbers that are there. And so that's how I would put it.
Okay, thank you so much, and congratulations for the future.
Thank you so much, Samar.
Before we go back to the participants, we'll take the questions on chat. There's a question from Praneeth Agarwal. Do we have any plans to expand our product line to cater to aviation, MRO, and OEM industry?
No, currently none that is there. We are, focusing on because aerospace again is too different. The qualifications are different. They use more aluminum, not so much of steel per se. So not the right thing for us right now, and that is something that not we are looking in for this at least financial year right now.
The other question is from Mitul Mehta again. Your presentation talks about opportunities in aerospace. So, which are the products you've identified on the aerospace side, and what level of R&D are these products in?
Yes. So within aerospace, there are two products, to what someone just asked right now on the chat. One is on the steel bit that is there. So they also use steel for welding and they have special requirements. So this is not for aero, this is more for space related. So it's for ISRO, not for the aviation bit that is there. So that's the steel part of it. And the other aerospace part that you're talking about is related to the electronics that are there. You have harnesses, you have analog signals that are being converted to digital signals. So that is happening at our associate company that is there. So that is how I would put it.
And how big is the market for composite doors and hatches?
Wow. Again, sir, we whatever study that we have done, we think that we can get a revenue. The market is very, very large, but assuming that we will be about 30% market share in the entire thing, just slightly on the conservative side, instead of being at 50%, we think that we could clock a revenue about 50 to 100 crores once we are in full stream per se. But since this is a new product, it will grow gradually. It's not that they're going to write a 100 crore order right up front. So it'll be about 20, 40, and that's how it will keep growing.
We'll take the next question from Ajay Surya. Ajay, you can go ahead, please.
Yeah, sir. Thanks for the follow-up. Sir, my question is, sir, if I look at the current shipyard or current defense ships in India, sir, can you provide what is the current number of ships that are in India and what is the government plan to take that up to? And also on in last 3-4 years, how many ships would have been developed in India?
Yeah, ये तो academic, मतलब this is more of a very generic question, nothing to do with me. But we have 135 ships that are there, which has to be upgraded to 175. And remember, by 2030, also to be remembered right now is that a lot of ships have become old and need to be decommissioned. There is that need to be decommissioned. If you see the Indian Navy plan, right, which is the Blue Ocean that Navy plan that is there, they are talking about reaching about 170 by 75 by 2030 and another 40 odd to come in the next 4-5 years. So very, very massive plans.
And so you talked about that on a tonnage basis, 10 to 15% of the weight of the ship is bulk bar. So, sir, based on that, how much tonnage the opportunity side? Even in the past conversation, you have mentioned that around 2000 crore is the market size for bulk bar, if I'm not wrong. So, sir, can you
Yes.
just correct me on the tonnage? How much tonnage would that turn into, like the opportunity
Yeah.
side?
When I had said about the total opportunity size, not 2000 crore, that was composite of all the products that we are doing should be in excess of about close to 1500 crores for all the product mix that are there. To give a number on tonnage will be too much that is there because some of the projects are still being discussed, some are classified in nature, so not the right forum for me to talk a tonnage. But if you can look up, if you can look at it from that perspective that we are looking to grow at 40% CAGR as we move forward, you'll kind of get the number that you're looking at.
Okay, sir. Sir, last question on the sir capacity utilization currently. And sir, post our new facility, sir, would we require further approval for the new facility, or is it just the player which is approved won't require a further audit of the facility or new any approval? Would that hinder the ramp up of the new facility? Anything like that?
So currently we're about close to 80% capacity, and hence we are augmenting our capacity to be double. And approval, of course, it's just not that once I'm approved, I can do anything under the sun. These facilities that come up also need to go through the whole process, but they are much simpler for an already approved player, unlike a new player coming in. It's much simpler.
So, sir, ramping up wouldn't take much time. Is the understanding correct? Like, if
Yes,
given the
yes,
orders we have.
yes, 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 you're right. You're right, sir.
Got it, sir. All the very best for future.
Thank you.
Thank you. Another question in the chat from Mitul Mehta. What is the current gross block in the defense business?
So, Piyush bhai, please can you take that one?
Yeah, it's around 11 CR. Our capex is not much because we are not capex intensive industry.
Okay. And his other question is, in terms of capital employed, would it be possible to break up between defense and dairy?
The maximum capex would be done for the defense products.
Would it be possible to give that data point?
Yeah. Our total block is around 14 CR, and out of that, 11 plus is for the defense.
So he's asking about capital employed, sir. Would it be possible to break up capital employed?
No, what we have employed right now. You are talking about that?
Assets minus liabilities.
Yeah. Sorry, I didn't get.
So he's asking what is the capital employed in the defense business and in the dairy business.
That's what I told you. It's around 11 crore in defense.
I think they're asking working capital deployed, Piyush, right? So, Mikul, to put it into perspective, about 80 to 90% capital is deployed for the defense business, and the remainder is for the dairy business.
We'll go to the next participant, Pradeep Rawat. Pradeep, you can go ahead, please.
Thank you for the opportunity again. I have just one question.
Yes.
So we have a tie-up with DRDO. So any other company can do a similar tie-up right now, or is it there a entry barrier to them?
Uh, Anyone can actually do it. It's not that no one can do it. However, there are civil and entry barriers. Please understand, Pradeep ji, that for Balpars, the last 14 years have been two of us, and Navy or Army, they are looking to indigenize thousands of products, right? So for a product that has already been developed, if a new player comes in, the gestation period is a minimum 24 to 36 months. Plus, it's not in their interest to do it because that's a problem solved for them. They rather solve a problem which they are still dependent on for import. So it's not incentivized for a problem that is solved. So that's how I would put it across. But it's open-ended. Tomorrow you could approach them, but it'll take you minimum 24 to 36 months just for the approval. Plus, he's not incentivized to give you the TOT or technology because he's rather looking to spend his energy on developing a product that has not been developed.
Yeah, great. Thank you. That's all
Thank you.
and all the best.
Thank you once again. Thank you.
We'll take the final question for the day from Pratik Chaudhary. Pratik, you can go ahead, please.
Sir, if you could give some color on apart from whatever you've disclosed till now, as you've been writing in your presentation, that you would be looking at other opportunities in areas of products that are being imported or offset contract obligations or, maybe tie-ups with foreign partners or maybe even looking at exports. So, if what are the other bigger things that are probably going to click for you in terms of inquiries or product that you're working for or products that you might enter?
Right. So Pratik, as mentioned, we are engineering heavy company that is, and we focus ourselves to work on complex systems or engineering because that's where we have our expertise at, or we've been successful at doing those kind of things. We are working on a lot of other products that is there, but it might be slightly premature to talk on this front till it gets finalized. Please understand, Pratik, it's not that I don't want to reveal it or don't want to talk about it. A lot of products that you develop, not all of them are successful. You have failures and all of that, because that's part and parcel of doing any development. We are working on few more products than what has been disclosed, but they are not at that stage that I could disclose it. Some of them are classified in nature, so I can do it only after certain permissions that are in place. But to the new prospects that we have showcased that is there, you could look at that in terms of the next couple of years that we'll surely be working on.
And is 500 target for FY28?
Sir, math कर लो sir. You from finance field में पूरा मैं बेचारा engineering तब sir I'm from engineering side sir.
Great, sir. Great. It was great talking to you. Thanks a lot. Thank you.
Thanks, Pratik. That brings us to the end of the conference call. Ankur, would
I
you
see
like to
one
give any
question.
closing comments?
I see one last question on the chat.
Just a second. No, there's no further question.
Okay. Okay. Fine. Great.
So would you like to give
Okay.
any closing comments, Ankur?
Yeah. So I would just like to thank, of course, my team that is present on the call and, they are listening to what we are talking to investors. Most importantly, I want to thank all the investors and shareholders that have bestowed trust in us and have had faith in us. We request you to continue to have a faith in us because, we are trying to, live the dream about making India and Atmanirbhar to indigenize the products that our nation currently is importing, and we are trying our best to be able to move on that path. So thank you once again for your faith in us. That's it from me, guys.
Thanks, Ankur, and thank you to all the participants for joining on the call. Thank you to the management for giving us their time. That brings us to the end of this conference call. You may all disconnect now. Thank you so much.
Thank you very much, Vinayji, for conducting this. Thank you very much. Thank you, everyone.
Thanks for joining.